The retail sector trailing behind the broader market this year, gaining 11% compared to the S&P 500's 27%. Joining us right now to talk about the state of retailers and the consumer is our guest host for the hour, Terry Lundgren. He's the former Macy's chairman and CEO. And Terry, it has been a continued year of fallout for retailers. This seems like one of the fastest changing arenas, even when you watch technology affecting just about every sector.
Sure. And there's winners and losers, just like there is in any point in time when the consumer's strong, but yet the overall business is generally flat in total. Pie's not growing. So there's going to be winners and losers. But the real winner here, Becky, is the consumer. Because the consumer is getting their product faster. They've got complete pricing transparency. They can set high demands on their own demands and what they expect from the retailers and get it.
Yeah, my life is easier.
Yeah, exactly. Because there's that's what brings out tremendous competition and of course innovation and investment in technology to make it easier for the consumer.
Terry, everybody worries about paying higher prices when we talk about tariffs. When I go to the store, everything's on sale.
Yeah.
So I don't know where this is coming from or how much leverage a lot of these companies have over their supply chain. And I think that's what it comes down to. The bigger ones have total control over it and can eat those costs or have someone eat those costs. But we haven't really seen that enter into the retail customer having higher prices. Why is that?
Well, I've been in the retail business for a long time, and I don't remember the last time that apparel prices actually went up. Mm-hmm. So because there's always improvements in the production process, of supply chain to get pricing down, and of course you're competing with others, and to your point. It's a combination of who pays for that. Does the retailer settle for a little lower margin, or does the manufacturer settle for a little bit lower margin? But at the end of the day, the apparel pricing in particular has not gone up in a couple decades.
Every analyst who comes in talks about the death of the mall, about how the stores that are based in the mall are seriously struggling. They're not sure how they can turn that around. Now, that's not to say that every mall is going out of business, but you're looking at a lot of malls that are no longer frequented. The traffic numbers are far down. And that's a huge issue to companies that have built up this infrastructure in malls across the country. What's the solution? What's the answer?
Well, first of all, the fact is, it starts with there's just too much retail space in America. I mean, America is way overspaced relative to Europe, relative to Asia. So we start with that base. We should have more space because Americans buy more. But not as much as
what are the numbers you've walked?
23.5 square feet per capita in the United States, and that compares to about less than 5 in most of the developed Europe countries, and even in China, it's less than 5. A lot of people there, but on a per capita basis, that's relative. And I think Canada 16, Australia 16, but 23.5 is just simply too much. Has to be a contraction. Certain companies are doing that voluntarily. Macy's reduced 20% of their stores 2 years ago. It was the right decision. Every one of those stores was cash flow positive. But today you're seeing stores like Forever 21, Payless, Sears, not voluntarily closing stores, but doing it in reaction to a need. So the good news is that over time, supply and demand is going to come back to normal once again.
Right.
That's going to be actually
That's a painful
good.
Process.
It's going to be a painful process, and it's not over. So, but at the end of that period of time, it's going to be good for those who have survived the challenge of these next few years. That's what I feel. And so there's going to be winners and there's going to be losers. If you've got a strong balance sheet, you're in good shape. If you don't, you're going to have a tough next few years.
How has Amazon changed the playing field? I mean, we've watched as Walmart and Target have actually done pretty well ramping up against them. I know Macy's.com has been an important part of the play, too. But how do you compete when they are changing the parameters every year? This year, it's like free one-day delivery or free next-day delivery.
Right. Well, listen, here's the reality. Again, consumer wins, right? Because the consumer doesn't care that Amazon doesn't make money when they sell you a sweater. They don't care about that.
We're psyched about that.
Yeah, you're psyched about that. And so that's actually, again, good for the consumers. The retailers have to compete with that. They don't have cloud services that can offset their profit margins, right? So,
AWS, right?
Yeah. But it's the reality. You can complain about it, but the reality is you've got to compete against that. So for the consumer, Amazon has been actually good for getting retailers to become more aggressive, to make sure their supply chain's working, to make sure they're investing in technology, doing all those things that are important, ultimately putting the consumer at the center of their decisions.
But how do you feel about, as a merchant, on the other side of this, even those who are the third-party merchants on top of Amazon, where they're feeling like, and you see the arguments being made all the time, that all of a sudden their products are being copied, right? That's Amazon is seeing that this mug is selling well, therefore they make a similar mug. Or they see that tie, they like that tie, they make a similar tie.
Yeah, they will. Exactly. But so retailers are doing that as well.
But that's always happened.
That's always happened. It's called private label, and that was always the basis of.
And should there be a different? But given the scale and scope of Amazon, and I'm not making the argument, but I wonder, given this sort of larger antitrust case, or at least investigation that's going on into all of these big tech companies, whether you think this private label idea is going to somehow change.
Well, I do. I think actually some version of private label or exclusive products is actually the key to growth for retailers in the future, because if you have the same identical product and it's everywhere, it's sold at all different stores, there's one thing that will make you different, and that's price. And so if you want to lower your price, and you can do that dynamically while the consumer's looking at your site, you can change your price. If you do that, ultimately there's no bottom. Because somebody's just going to keep going lower and lower. And many of those companies, Andrew, are going to go out of business. Again, the consumer's fine with that because they're getting that purchase.
I want to make this actually tradable and actionable. When you look at Macy's, where in the world is Macy's a $5.1 billion company? I know we've talked about the real estate angle. It's got to be worth 4 times what it is now. What is the end game for Macy's? You talked about this shrinking square footage. What does it look like 5 years from now?
Well, first of all, I think that's an excellent question for the CEO of Macy's. But I've been away from the company for the last 2 years.
What would you say it should look like 5 years from now?
No, all I'm going to say, Steve, is that it's. I think Walmart and Target and others are trading at 24 times earnings. Macy's trading at 5 times earnings or something like that. So they're making money. They've got a good balance sheet. So you have to decide as an investor whether you think this is a good time to buy or not. But actually, I think for those details about what it's going to look like, I know Jeff Gannett is going to have an investor meeting in February, and I think people are looking forward to hearing that. He'll answer those questions for you.
Terry, let me ask you, you just laid out the reason for why Amazon has been so great for consumers. They've driven prices down, forced other retailers to kind of follow suit and make things easier for the consumer. There's a lot of talk in Washington.
I wouldn't say it's been great for retailers.
Well, but I know, but there's a lot of talk, there's a lot of talk in Walmart. There's a lot of talk in Washington about busting up Amazon and some of the other big tech companies. In the past, it's been looked at, if it's too big, it's been looked at as a reason because consumers suffered because of a lack of competition. That would not be the case in this situation.
That's not the case in retail.
Do you think Amazon should be broken up?
No, I don't. I don't. I really don't think so at all. And I look at companies you mentioned earlier, like Target and Walmart, who are doing fantastically well in the world of competing against Amazon, taking them on head on, differentiating their strategy. The reality is, Becky, 90% of all purchases are still done in a physical store. Right. Amazon's half of the online business, so they have 5% of the market. So there's a lot of business out there. I think companies particularly like Target and Walmart are making all the adjustments, not just today, but have been for the last few years to get to this point and investing in innovation, and they're doing a great job. And so I think there's going to be companies like that are going to really excel in this quarter and forward into 2020.
And to your point, Walmart's twice the size. Walmart alone is 10% of total retail sales.
Exactly. And Walmart and Target, here's the beauty. Frankly, I think both of those companies have been slow in their online capabilities. Macy's has been very advanced on that subject. Walmart and Target have been slow. Now they're putting their foot on the accelerator. I like that. So Wall
Street's rewarding that too.
Oh, you're darn right it is.
With both Walmart and Target shares.
It's a good thing to have a low percentage of your business in online today because there's nothing but upside for you. And those two companies have done a brilliant job of totally changing that. Walmart was up 40% in their online business. That's a big big base to begin with, and on 40% on top of that, and they probably won't be up that high on this quarter. But know that online sales are a significantly higher percent of the total business in the fourth quarter than they are in the first, second, and third. So, there's a lot of reasons why you'd be optimistic about companies that are putting their foot on the accelerator and growing aggressively the online business.